Hello, and welcome to Instant Insights, Global Data's Strategic Intelligence podcast. At Global Data Strategic Intelligence, we track over 100 tech, industry, ESG, and macro themes impacting all major sectors. I'm Frankie, and today I will be talking to David Allison, Head of Product Planning at MG Motor UK, to hear more about the company's plans and its take on the UK car market and its electrification. I also spoke to Al Bedwell, Director of Global Powertrain at Global Data, to discuss the prospects for electrification in the UK and European car market. The MG brand is part of the Shanghai Automotive Industry Corporation, but has a long heritage in the UK where it began as Morris Garages. It celebrated its 100th anniversary in 2024. MG achieved record sales of 81,500 units in the UK in 2024, the 10th biggest car brand in the UK. At the heart of its success are its hybrid and electric models. In 2024, the MG4 EV hatchback was the UK's fourth best-selling electric vehicle and was the second best-selling model with private buyers. David, thank you very much for joining us this morning.
You're welcome. Good to see you.
One of the first questions I wanted to ask was, how do you see the UK market for EVs developing and where do hybrids fit in?
I think there's two very, very interesting points there, Frankie. And to be honest, I can only really see it increasing because at the moment, that's what the government policy is dictating the industry does. It's fairly universally known that we are on a rapid transition into electric vehicles. The current ZEV mandate dictates that the industry has to be at 80% zero emission by the time we get to 2030. And of course, completely zero emission by the time we get to 2035. It's probably, again, pretty well documented that EVs have hit a little bit of a bump in the road over the last 12 to 18 months. There was a huge meteoric rise in the sales of EVs. I was looking at some numbers just the other day. I mean, the industry still managed to sell 382,000 electric cars last year. And in 2019, it was 38,000. So it just goes to show how much EVs have increased in their popularity in a relatively short space of time. And whilst the sales have continued to grow, the pace of growth hasn't, matched what we've seen slightly prior to that. But I think, the line of trajectory, as far as I'm concerned, is really, really clear. I think what we're seeing, certainly at the start of 2025, is EVs appear to be in a good place. The market is up 40% in the first sort of 10 to 12 weeks of the year. The private market is looking really, really strong for EVs. And I think that is principally down to model availability. If you look at the amount of EVs that have been registered this year, there's a 25% increase in the amount of models that have been registered compared to this time last year. So the choice is only getting better. The affordability, which of course is a major concern around EVs, is only improving. So manufacturers are bringing more affordable EVs to market. And of course, because the manufacturers are required to hit a certain amount of volume, the levels of discounting has never been stronger. So, making cars more affordable for people that want to buy them is a clear barrier into EVs. And that has certainly been getting better over the last 12 to 18 months. And like I said right at the beginning, I can only see that improving.
In terms of the MG model offering specifically, do you see it heading more towards battery electric vehicles in the long run?
Yeah, and again, that's principally dictated by the fact that it has to. But having said that, I think it's worth talking about what else is available in the marketplace as well. I think if you want to be successful in this market at the moment, that it's important that you have a range of fuel type offerings, because of course there's plenty of people that are still not happy to go to electric. They still want a combustion engine car of a certain type, and we're still seeing some growth across the other alternative fuel segments, which of course is hybrid and plug-in hybrid. Now, last year, as you'll remember, we spent a lot of time launching new cars. So last year we launched 5 brand new models in 6 months, and pretty much all of those were across an alternative fuel platform of some description, which predominantly was hybrid, and of course plug-in hybrid. So if you look at our sales for this year up till this point, only 33% of what we sell is pure petrol. So the vast majority of what we're selling today is across hybrid, plug-in hybrid, and of course battery electric. And I think that is a really kind of compelling proposition, and really kind of fulfills the majority of what people are looking for.
When looking at present day, could you tell us a little bit about the newly launched MG S5 and where does it fit into the MG product offering?
Yeah, so it's a really exciting time for us right now. So having spent a lot of time last year launching cars, we're about to start the process again for 2025. So the MG S5 EV is going to be the first of a number of battery electric cars that we're going to be launching this year. So last year was very much about replacing our core range of combustion engine cars and converting them to hybrids. This year is very much about replenishing and rejuvenating our range of battery electric cars. And it's quite interesting, if you look at, we were kind of referred to the growth of EV sales, and we've been very much part of that. So if you look at electric car sales since 2019, it won't come as a massive surprise that Tesla sells far more than anybody else. But at MG, we're the fourth best-selling electric car brand since 2019, very close to BMW and very close to VW, who are in second and third respectively. And if you then look at private sales, so these are cars that are sold to private customers as opposed to corporate customers, which has historically been a very, very strong part of the EV market, we're actually second. So behind Tesla, obviously. So we sell more private, or have sold historically more electric cars to private retail customers over the last 5 years than anybody else, apart from Tesla. So it's actually a really, really good place to start. We have a lot of cars out there in the market being driven by our customers. MG has picked up a reputation, and quite rightly, for bringing affordable electric cars to market, hence why we're the second best selling brand in private retail behind Tesla. And it comes at a time when, as we said earlier on, it appears that interest and momentum is picking up again, and that's purely looking at the market statistics for the first 10 to 12 weeks of this year. So it's a really, really good time to be launching a brand new battery electric car. So where it fits in the range, it's the second car that comes off our bespoke modular scalable platform, the first car of which was the MG4. So the MG4 that we launched towards the end of 2022, we've sold over 42,000 MG4s in that period. It's been a phenomenal success. It's the UK's third best-selling private retail electric car, behind, funnily enough, Tesla Model Y and Tesla Model 3. So there's definitely a pattern in there somewhere. It's a slightly bigger because it's an SUV, so it's slightly longer. It's obviously taller, just a little bit wider, but fundamentally sits on that bespoke electric vehicle platform as MG4. So a lot of the architecture, the motors, the batteries, that kind of thing will be something that people will be very familiar with. But it sits in a segment which is, again, very, very popular in terms of sales. So that kind of B segment SUV, so around about 4.45 meters in length, and coming in a market which has got some very, very good and very, very strong competitors in. So given what the car is, given the basis of electric car sales that we've had up till this point, we think that MG-S5 is really going to be extremely popular, and takes all of that sales volume and work that we've done up to this point, and we'll take it to another level.
Al, over to you. How do you see the outlook for the UK and European BEV sales ahead?
Yeah, thanks, Frankie. That's a great question, and obviously it's really pertinent at the moment because there's been a kind of widespread thoughts and reaction in the industry that people are kind of cooling off on battery electric vehicles. That's certainly been the case in Europe and also in the US to some degree. So yeah, it's interesting to kind of look ahead and see what, is that something that's going to stick around, or are we going to see some growth in the sector going forward? Is this year going to be a good year for battery electric vehicles or other electrified vehicle sales in the UK and in Europe? Just to set the scene, so well, last year actually in the UK, if I talk about the UK first, it wasn't a bad year for battery electric vehicles. We saw quite a lot of momentum in the industry towards the end of the year, but it was very much regulation driven. So it was, there is a ZEV mandate, and car sellers had to react to that to get product into the market and push product into the market, and that actually resulted in the UK last year battery electric vehicle sales growing by 21%. So it wasn't really a bad year in the end, but it's not sustainable because that did require a lot of subsidy and from the industry, which is not sustainable. And there are ongoing negotiations at the moment with the government about what might happen this year in terms of targets. That was 19% of all car sales in the UK last year. Plug-in hybrid sales did pretty well as well. They grew by 19% to 8% of the total. And then full hybrid actually grew 9% to 13% of the total. So they outsold plug-in hybrids, but were outsold by battery electric vehicles. The ZEV mandate for the UK, which is driving demand for zero emission vehicles, was technically missed last year, but actually due to some flexibilities in the system, the level of fines that had to be paid by the industry is pretty low. Looking ahead to this year in the UK, we think that sales of battery electric vehicles will rise again. We're looking at a figure of around about 450,000 units. Last year, with 380,000 units were sold, so it's a significant rise again. There is a ZEV mandate for this year that requires 28% of passenger vehicle sales to be zero emission, and we're saying that 23% of the total will be so. So that, on the face of it, sounds pretty bad and like a big miss for the industry. But in fact, there is a vehicle emission trading scheme, and that does allow manufacturers who are not going to hit the target to actually buy credits for those who register more than the requirement. So it's like a cap and trade system. So an industry-wide ZEV target is set, but market participants can trade so that individually they don't have to sell 28% of cars as ZEVs. And the £15,000 fine per vehicle that doesn't meet the requirement, that's a maximum, and fines are actually expected to be quite modest. So we're going to see, I think, another decent year for battery electric vehicle sales in the UK. But if that doesn't happen, then what will happen is that more OEMs will have to buy credits from those who oversell battery electric vehicles, and then to pay for those credits, the price of combustion cars will be, relatively higher to to offset that. So there'll be a kind of a balancing influence. And the point of this vehicle emission trading scheme is that we get a balance, and overall the target gets met, but individual players don't necessarily have to hit that target. But we think that sales this year, as I said, will go up by 19%. That'll be 23% of the total market. We're expecting plug-in hybrid sales to go up, not as much as last year, because they actually the way that they're recognised for CO2 under WLTP is changing, so that they will not be as attractive from a tax and incentive perspective. But nevertheless, we do see that part of the market growing in the UK by 6%. And then we actually see full hybrid sales also continuing to grow. We're seeing that reaching almost 300,000 units this year, which is 12% up on last year and 15% of the total market. And those full hybrids, and actually the 48-volt mild hybrid market as well, is doing well. What we're seeing is a new generation of 48-volt technology coming onto the market, which is kind of more powerful. So these cars have the ability to drive for short distance. They're almost more akin to a full hybrid. They can drive for under electric power alone, which the earlier generations of 48-volt vehicles couldn't do. So they feel more like full hybrids, although technically they are lower voltage hybrids at 48 volt. So that's doing well. So they suit people who aren't necessarily ready to make the leap to a plug-in vehicle, but they want something that's more fuel efficient and lower CO2 than a conventional combustion vehicle. So that sector's doing well for the moment. We see growth across the plug-in sector as well for the UK. Again, it looks as if the 28% ZEV mandate target would be missed. But in fact, with flexibilities, then overall it looks as though that target will be achieved. It's possible to pull sales of ZEV cars into this year from next year if you overachieve next year, and also if the combustion car segment has a lower CO2 for a particular manufacturer than it did last year, i.e. that CO2 is going in the right direction as well, that will also help as well. So there are allowances made for that. So overall, although on the face of it, it looks like the industry in the UK is going to miss its ZEV targets. In fact, the gap will be relatively low, and we think that a BEV sales of around 450,000 are what is going to be required in combination with other electrified vehicles in order for the target to be met. So it's moving in the right direction.
And how do you see the prospects for the European market?
If we look at Europe, across Europe, last year was stagnant for battery electric vehicle sales. I think we're showing pretty much the same, just under 2 million units of passenger vehicle battery electric vehicles sold last year, as was the case in 2023. We do see growth this year though, so we're more optimistic, and we've seen that already. I think looking at January and February, the passenger vehicle BEV sector across Europe is already up by about 33%. That's clearly positive. There are reasons for that. There are lots of new products coming onto the marketplace. The Chinese are certainly helping as well, even though they're pivoting more perhaps towards plug-in hybrids, which can escape the additional tariffs that hit the battery electric vehicle sector. But nevertheless, there's a lot of homegrown product coming onto the marketplace. Some of that is more affordable. We've also saw an industry accepted figure which says that battery costs fell by about 20% last year. So that's the pack price of batteries. So that's moving in the right direction. That can be fed through to the cost of battery electric vehicles, and in conjunction with those sort of smaller, more affordable vehicles coming onto the market, that we're starting to see that, ICE versus BEV gap closing. And of course, we're not saying that it's in the mass market, it's fully closed, but it's moving in the direction of making battery electric vehicles more affordable. Of course, there is a CO2 target in Europe this year to be met. We know that now that there are flexibilities imposed on that, but nevertheless, it's going to drive more battery electric vehicle sales and plug-in vehicle sales this year versus last year. Last year there wasn't that imperative to meet a new CO2 target. So what's the point of releasing and pushing new battery electric vehicles into the EU last year for no practical gain in terms of regulation compliance? This year it's different. And even though it's now the CO2 target is going to be averaged across this year and 2026 and 2027, we do think that a lot of that will be front loaded. So we have actually lowered our expectation a little bit for this year in terms of battery electric vehicle sales across Europe, but we're still pretty optimistic. And we think that there could be an uplift from last year of about 30%. So we've gone from a flat year last year to a plus 30% this year, and it's looking that way certainly in the opening months of the year. Typically, the sort of closing months of the year see a lot of activity, a lot of battery electric vehicles pushed into the market in order to kind of meet the target set for the year. So we're expecting that to happen as well. But even so, it's got off to a pretty good start. Not everyone's doing well. I think Tesla, the problems of Tesla are well known. It's hard to disentangle how much of the perceived sort of political views of Mr. Musk are influencing people not to buy his cars, and how much of it is because of, his cars are getting perhaps a bit stale in the marketplace and some new models would be needed. And we've got a refreshed Model Y, which I think will help support sales of Model Y. But no doubt there will be some marginal impact of people who decided not to buy a Tesla because they don't like Mr. Musk's views. But I think it's more pragmatic reasons. There's a lot of competition coming onto the market now for Tesla, and that's coming from European brands, it's coming from Chinese brands, and of course that's making life tougher. We always thought that would happen in any case. So Tesla probably needs some new product in order to kind of keep its momentum going, and it's going to have a tougher year this year, no doubt, in Europe. Yeah, but overall, so we've got a figure looking at in terms of numbers. So for battery electric passenger vehicle sales in Europe, as I said, there were 2 million last year. We think that's probably going to be about 2.65 million units this year. So significant upgrade. It kind of gets the industry back on track. I mean, we've got no doubt that long term we will move to a fully electrified future for Europe's car sector. It may not happen by 2035, but I think certainly by 2040 the industry should have pivoted towards that. There may be some delay in the 2035 CO2 target, but I think it'll happen certainly by 2040. But so this kind of, our expectation for this year kind of gets things back on track, gets things moving, maybe gives some confidence to the sector that their investment plans and their program plans can kind of get back on course. I think we're still probably below what we thought might happen a few years ago, but we're getting back towards the trajectory that was assumed, and really has to happen if the CO2 reduction targets and greenhouse gas targets in the long term are going to be achieved.
That's all we have time for today. Thank you to David and Al for those instant insights, and thank you for listening. From us at Global Data, Strategic Intelligence, see you next time.